professional indemnity claim in emerging economic accounting for IFRS. It in July 2009 report the International Accounting Standards Board and its US equivalent, the FASB, the Financial Careers Advisors Group, noticed that the incorrect loss model for loan loss provisioning and more specifically difficult in applying that model when it comes to identifying appropriate trigger point for loss recognitions had in many instances delaying the recognition of losers on loan portfolio, resulting in loser embedded in the financial system being generally understood. The FACG advocated that the IASB and FASB explore alternate to the incurred loss mode for loss provisions using more forward looking information. 5 years later, the IASB introduced as a subchapter or International Financial Report Standard 9 implement requirement governing accounting for an entry exported credit losses on both financial assets and its commitments to extend credit under these requirements, which take effect for annual reporting period being on air after 1 July 2018. It is no longer necessary for the credit even to have audited before credit loser must be recognized. Instead, an entity is required to account for expected credit losses and changing in those expected credit losses. For example, regardless of the way in which an entity assesses significant increasing in credit risk applicable and are revertible provision that the credit risk on a financial asset has increased significantly since international recognition when contractual payments are more than 30 days past due. The amount of expected credit losses has to be updated at each reporting data to effective search in credit risk since ultimately recognized. is, as in name suggested, as international student. Its implementation is mandatory for those countries which has adopted IFRS. It a view of the interactive map of the IASP Plus website show the extent of the IFRS adoption, particularly by the emerging economic. In this October 2015 Global Financial Stability Report, the International Monetary Fund noticed that final stability risk continues to rotate for advanced economic views toward imagining economic. In particular, at the point in the credit cycle leading in emerging economic, which include of non-performing loan as cooperative earning and assets quantity deteriorate. Monitoring corporate health in the emerging economies. Economic signal looming economic slowdown for or even a recession. Against this background, IFRS 9 is likely to curtail the ability of leaders in emerging economic to extend and pretended credit loss will have be to recognize past experience in advanced economies show us that when leaders are focused to the recognized credit loser, they become convert litigate principally against big pocket insurance difference in the form of the providing of professional services, Lara value survey accountant and financial advisors. There is no reason to think that faced with sharply evaluated credit losses, they have been focused by the IFRS 9 to recognize in the financial statement leaders is the emerging economic will response and any difficulty if the current economic slowdown persists in the emerging economic over the next few years. On there is a reasons the introduction of IFRS 9 will very likely held and the dynamic increasing in the volume and severity of the leaders' professional indemnity claims.